Does the idea of receiving $10,000 in cash with no interest appeal to you? What if there was a method to convert credit card balances into quick cash at 0% APR, and you could utilize this opportunity over and over again? Should you take advantage of such an opportunity, or would you? The answer is yes, but it comes with some nuances that need further explanation. When you begin a business or invest in real estate, you might need a loan to cover your initial expenses. However, to get a loan from a bank, you usually have to show proof of your income and provide your tax returns. Alternatively, you could consider options like taking out a second mortgage on your home or getting a loan for a car, although these might not be the preferred choice for everyone. Let's be honest. What you truly need is unsecured credit. The simplest way to obtain that is by liquidating your credit cards, turning them into cash. What you're about to discover has been proven to be effective. Yet, there are a couple of challenges you'll encounter while converting credit cards into cash. First, you'll have to do some research to identify suitable credit cards to utilize. Afterward, it's important to keep all your financial transactions in one place for effective management. That's it. Now you're closer than ever to discovering how to transform credit into cash. Next, discovering the steps to receive cash refunds from your credit card company. So keep watching. Our method for turning credit cards into cash covers all the bases. We'll guide you on how to transform credit into cash without dealing with hefty interest rates and transaction fees. Many are familiar with the concept of a cash advance. You visit the ATM or the bank to withdraw money from your credit card. However, this comes with a significant transaction fee, and the interest rate is typically around 25% APR. This isn't the way for you. It's the initial mistake people often make when attempting to convert credit cards into cash. They opt for a high-interest loan on one credit card and exhaust its limit. Unfortunately, the elevated interest rate makes it difficult for them to pay back the principal amount, leading to accumulating bad credit card debt. The smart and intelligent investor, on the other hand, employs a balance transfer strategy to secure the cash advance and promptly pays it off. Wondering how they pull this off? Here are 3 easy steps for liquidating credit cards. Step 1. Identify a credit card that allows you to take the maximum cash advantage. This should be your primary card to obtain. Step 2. Locate 3 or 4 additional credit cards that permit balance transfers at 0% APR for a 12-month period. These offers are often readily available once you've enrolled in your initial credit card. Getting one credit card often opens the door to more offers at favorable rates, and this is where the 0% APR offers become valuable. Step 3. Secure the maximum cash advance permitted by the first credit card. Immediately transfer this balance to the other cards offering 0 APR. Suppose you identify a credit card with a high maximum cash advance and secure it as your primary card. Upon enrollment, you receive offers for 3 additional credit cards with 0% APR on balance transfers for a year. Utilize the first card to take the maximum cash advance allowed. Then promptly transfer that balance to the other cards with 0 APR. This strategic move enables you to access immediate cash without incurring interest for the initial 12 months, leveraging the favorable terms of multiple credit cards to your advantage. However, it's essential to manage this approach responsibly and be mindful of potential fees and long-term implications. Congratulations! You've successfully set up a 0% APR loan that you can comfortably pay off in manageable installments over the next year. Additionally, the first card where you initially took the cash advance will now have a 0 balance. While there might have been an initial cash advance fee, depending on the card, the overall deal is unparalleled in terms of interest-free cash. Your initial cost for a cash loan is, therefore, the absolute minimum you can find in the banking industry. Now you have the opportunity to invest the cash in your business and repay it without any interest for an entire year. Once you do, you will have the kind of credit you need to get even more credit. That is, if you still need it. Since your first credit card has a 0 balance, you can borrow it again whenever you want. Next, discover ways to have your roommates cover your credit card payments. If you already have a credit card with a low balance, there's another method to obtain cash from it. Suppose you have a balance transfer offer of 0% from one of your new cards. In that case, you can transfer the maximum allowed amount from the 0% interest card to the card with the low balance. For example, if the existing card has a low balance of $300, request a transfer of $3,000 to it. This results in a negative balance of $2,700 on your original card. Surprisingly, you can call the credit card company and they will issue you a check for the overpayment amount. This check or cash can go directly into your bank account. So you now have another method to secure $3,000 cash loan at 0% APR. Alternatively, you can utilize this negative balance to settle any bills that accept credit cards, and you'll still be paying 0% interest because you're not actually making new charges. Note, this method is effective only on an existing credit card with a balance. Avoid attempting a balance transfer to a credit card with a zero balance, as the bank will not accept the transfer on a credit card with no balance. A minimal balance is all that's required for this approach to work. Convenience checks are the checks that accompany your credit card statement in the mail. They are blank checks that you can fill out to pay anyone. However, it's important to note that the same fees and interest apply when using your credit card for a cash advance. Therefore, if you write the check to yourself and deposit it into your bank account, it functions similarly to a cash advance. Nevertheless, this isn't a universal rule. To help you begin using convenience checks, a bank might send them with a special offer, much like they send 0% balance transfer offers. This offer could include benefits such as no cash advance fee or a 0% APR for a specified period, provided you use the checks by a certain date. Always keep an eye out for special offers, as utilizing them can expedite the process of turning credit cards into cash. Up next, transform into a merchant that accepts cards and master the art of converting credit into cash. Some companies offer a service where they charge your credit card and send out a check on your behalf. While utility companies often accept credit cards, this service is particularly useful for expenses like rent, as many landlords prefer cash over credit. Many online platforms offer services in this domain. They typically charge a fee ranging from 1.5% to 2.5% of each transaction amount. Essentially, they process your rent payment on your credit card as if it were a purchase and then send a check to your landlord. Let's give you an easy example. Imagine you have a monthly rent of $1,000. Instead of paying directly from your bank account, you use an online platform which allows you to pay your rent with a credit card. Let's say the online platform you use charges a 2% fee. You initiate a $1,000 rent payment through the online platform, incurring a $20 fee, which is 2% of $1,000. That online platform then processes this payment on your credit card as a purchase. Following that, they send a check of $1,000 to your landlord on your behalf. In this scenario, you've essentially used your credit card to pay rent, albeit with a fee for the convenience provided by the online platform. This means that this charge counts as a straight purchase on your credit card, with no cash advance fees. This also means that if you have roommates, you can charge your entire rent, then take their cash and put it in your bank account. These services accept multiple credit cards for a single rent payment, offering great flexibility. This underscores the importance of having 3 or 4 cards to effectively convert credit cards into cash. Always maintain flexibility by keeping your options open when employing a balance transfer strategy for future investments. A merchant account, essentially a business account, serves as a means to liquidate credit cards. By opening a merchant account, you gain the capability to accept credit card payments from others. The funds received through these transactions are directly deposited into your bank account in the form of cash. This feature provides a practical avenue for converting credit card transactions into readily available funds. You can then use the cash to pay off a balance when you take a cash advance of your own. So, when can you take cash from other people as payments? If you have roommates, you can take their share of the rent on their credit cards. Or if anyone owes you money, they can pay you with using their credit card. If you are starting a business, you can take credit cards as payment. It all goes into your bank account as cash, minus the processing fee. All you need is a card reader and a credit card processor. The card reader goes on your cell phone, so you can take payments anywhere. The money will be in your account within a few days. Some of the top credit card processors are Square, Payment Cloud, Leaders Merchant Services, and Flagship. Some processors don't check your credit or ask for a business bank account. They may be suitable for high-risk businesses or individuals with poor credit. This is another way to turn credit cards into cash you may not even have considered. As you can see, there are many reasons why liquidating credit cards into cash works. Enjoy simple monthly payments that directly reduce your principal balance. Access unsecured credit without having to use your assets as collateral. Undergo minimal credit and background checks. Reuse the credit line as needed. Gain instant access to cash whenever required. Experience potential improvement in your credit score. Discovering the process of converting credit into cash and liquidating credit cards can be an exciting opportunity. What are your thoughts? Do you feel prepared for this? If so, share your comments below.